you're watching this video, you probably received an IRS Form 1099-K and you want to know what to do with it. Can you ignore it, or do you need to report it on your tax return? Short answer, you do need to report it on your tax return or face receiving a nasty letter from the IRS with a tax due amount along with penalties and interest. Keep watching this video and I'll show you how to best report a 1099-K on your tax return. Just so you know, this video is updated with the latest information from the IRS, including what to do with 1099-Ks sent to you in error. Hi, I'm Noel Lorenzana. I'm a CPA. Follow me for the latest important updates with regards to taxes that affects you. So you probably already know that the IRS delayed the new 1099-K reporting rules until 2024 and actually increased the reporting threshold to $5,000. If you need information on that, you can check out my other video up here which explains everything. Okay, we have scenario number one. Imagine that you cleared out your garage and sold a bunch of old stuff on eBay. Throughout the year, these sales added up to $5,000, triggering a 1099-K form. Now, you're not exactly sure what the original cost was for all the stuff, but it's safe to say it was probably over $5,000. Let's suppose you did some figuring and you estimate that the amount you spent for everything was $10,000. Here's how to handle this on your tax forms. In this case, we're talking about personal items sold on eBay that were bought a long time ago at a cost higher than what they were sold for. So what you've got is called a personal loss. Now the thing is, the IRS doesn't let you write off these types of losses. But remember, you've still got to report this on your tax return. If you don't, the IRS will just assume the whole $5,000 is taxable. You'll get a deficiency notice from the IRS with taxes due along with penalties and interest. This is kind of new for this year, and this is how my software shows how to do it. On the screen, you'll see Schedule 1 Form 1040. There's a Part 1 and there's a Part 2. Part 1 is where you show additional income. So down on line 8Z, Other Income, you'll list out Form 1099-K personal items sold at a loss. Enter $5,000. This will be $5,000 of additional income that will flow to page 1 of Form 1040. Now on Part 2, line 24, Z, Other Adjustments, you'll indicate Form 1099-K personal item sold at a loss. You'll enter $5,000. This is the amount of money you paid for the items. So this $5,000 will flow to page 1 of Form 1040, negating the previous $5,000 of income and basically bringing it down to a net of zero. So no income or loss reported. So this effectively zeroes out the $5,000 1099-K. Done. It's pretty straightforward and works for the fact pattern I've just outlined. Now, a lot of folks wonder what to do if they don't have all the receipts and can't remember what they paid for certain items. This is a real pain point. If the IRS ever comes knocking for an audit, you're supposed to be able to provide your original purchase price, your proof of purchase, receipts, bank statements, credit card statements, whatever. But let's be real, most of us don't keep that kind of paperwork, especially for personal items that we've sold at a loss. It's kind of a tricky situation. My advice would be to pull out a notebook and come up with some reasonable cost estimates. If push comes to shove, you can always show this to evidence your costs. So let's go on to scenario number 2. Another possibility is that you received a 1099-K that was sent to you in error, meaning that you should never have received it for whatever reason. Maybe it was something personal, or maybe it wasn't even for you. Here's the official guidance from the IRS. So what the IRS says to do with this is report the income from your incorrect Form 1099-K on Schedule 1 Form 1040, additional income and adjustments to income. Then note the error as shown in this example. So in this example, you receive Form 1099-K that includes $20,500 that your family sent you for college tuition and books. Clearly it's not taxable income, so how do you report this? Okay, so similar to scenario number 1, we're looking at Schedule 1 Form 1040, Parts 1 and Parts 2. So on the same line as scenario 1, line 8Z, you'll enter incorrect Form 1099-K and you're going to list the amount. In this example, it's $20,500, and this flows to page 1 of Form 1040 as income. And on Part 2, line 24Z, you'll indicate on other adjustments, incorrect Form 1099-K, indicate the amount 20,500, and this amount now flows also to Form 1040 page 1 as a reduction, so the net effect is 0. And that's it. This is the IRS official guidance. It's pretty straightforward. So let's move on to scenario number 3. Imagine you sold some personal items on eBay and ended up making a profit. Picture something like Star Wars collectibles that have gone up in value. Suppose your total sales for the year were $4,000 and you got a 1099 for that amount. After crunching the numbers, you figure out your original cost was $2,500. In this case, you're looking at a taxable gain of $1,500. Depending on the nature of the activity, it could either go on Schedule C, profit or loss from business, or on Form 8949. In this example, we'll assume there was no business activity and it was just personal sales, which would be reported on Form 8949. Here's how the IRS would want you to show that on your tax return. In this example, the items sold on eBay were purchased years ago for less than the selling price. Basically, you have a taxable gain. In this example, it's a personal transaction, so it would be reported on Form 8949 as follows. It's a long-term transaction, so box F would be checked. In column A, you would indicate the description of the item sold. In columns B and C, you would indicate the date purchased and date sold, or for this example, entering various might work as well. In column D, you would indicate the proceeds. This should be the same amount reported to you from the 1099K, so we'll put $4,000 here. In column E, you would enter your total cost, which we said was calculated at $2,500. This is a taxable gain, so no codes are necessary in column F or G. Therefore, column H would be $1,500. This number then flows to Schedule D, capital gains and losses, on Part 2, line 10, as shown here. On second thought, you probably do want to enter the dates to show that this was a long-term gain. It may or may not matter. If you follow my instructions, I think it's pretty straightforward, but for some, maybe it's not really that straightforward. If you need help, definitely seek out a tax pro. That's about it. You may encounter incorrect 1099Ks being issued to you, and theoretically, the IRS says to go back to the issuer and ask them to correct it. But practically speaking, they probably won't do it, so just use the methods I covered to report it on your tax return. This way you avoid a deficiency notice and the IRS will probably leave you alone. Let me know in the comments if you have any questions. If you found the video helpful, please be sure to like the video and subscribe if you want to stay connected and hit that notification bell. I've got another video up here which goes over some more very important 1099K questions that you might have. As always, thanks for watching and see you in the next video.